Welcome to Bitcoin Technical Analysis. Today I'm here with Tone Vays and George Samman. It's been a decent amount of movement in the markets besides Bitcoin, and there's been a lot of movements in the altcoin market too. So how's it going, Tone? You're back from Florida.
I'm back from Florida. Oh man, New York got snowed in. My flight kept getting canceled. Had to rent a car and drive back to be back for Monday morning. Jeez, what a week.
Well, at least the gas prices were probably pretty low, so
True.
that's probably the only positive thing about that. How's it going, George? George's doing
Doing
good.
well, thanks. I've been watching some of these markets, and there's been a lot of whipsawing around for sure.
Definitely, definitely. Okay, well, George, why don't you start off and tell us what you want to talk about today?
Okay, I'm going to start off with Bitcoin, and I'm looking at the weekly first, and I see that we're starting to see the crossover in the MACD that we talked about in the past, and some of the other indicators are starting to go to the downside. So I'm using that to look at some support levels below. I think that we'll probably get a little bit more downside here, and 382 is a fairly big level on the 4 hour. And below that, you have 370 and 356 where we have been in the past. And I don't know that we get a big move down here, but I could see it consolidating below the trend where it's been for a while. So right now, I'm just looking. I've been a little confused by the market lately, to be honest with you. That it's been all over the place. So I'm looking more for levels of support to put a long trade on if they get down there. So that's kind of how I've been playing it. Also, here's Ether, Ethereum, and it's been a crazy consolidation up here, up and down. Very hard to tell the movement again. Today we're up at around 260, but it's in a bullish trend, and if you can get in at the bottom here around 225, 230 level, or if it breaks out above this 280 level, those are the levels you probably want to be accumulating this. It's definitely turned from a boring market into a semi-bull market right now. And then, of course, something we always talk about, which is the U.S. dollar. It's starting to have downside, and that's because the Fed basically has decided they're not going to raise rates anytime soon, and they've been dovish. This has been kind of positive for other currencies and for the commodities market, which I'll start talking about in a couple of minutes here. So Euro USD has started to move higher, and it looks like it could break out if it gets above 110. But this is a kind of a weird move, and I'll talk about it in a minute when I look at some of the European markets because they're not doing very well. But I guess the euro and dollars, they're negatively correlated, so when one goes down, the other goes up. Here's another currency that I look at a lot, which is the Japanese yen, and when we started going down in the Dow, the yen started going up because it's a trade where if there's a risky environment, people flock to the yen. And it has gone down, but it's kind of stabilized now, and it looks like it's in a place where it wants to decide. It's above its trend line here at about 84, so that's support for it now. But you don't want to see this go up. You want to see it go down. That's when you'll know that there's more risk in the markets. Obviously, we've been having these crazy days in the S&P, and you've had these flight to safeties. So another market that I look at is the Aussie dollar, and that's had a rally as a result of these rallying, and the U.S. dollar are starting to come off. You can see here it's kind of having a rounding bottom-ish, but this is just a counter-trend rally at this point. I don't see it going much higher than that. The Canadian dollar is in the same position as well. And so here is the Italian market, which I haven't really looked at a lot lately, but I have a weekly chart up here. And we're going back to 2009, and it's kind of reaching some critical areas where it hasn't been in a while, around this 19 mark. If it goes through there, it could fall very far below. Obviously, there's been trouble with the banks in Italy lately, And Europe, it just doesn't seem to be doing well at all. I mean, Draghi's guaranteeing that he's going to come to save the day if need be in March, but a lot of the markets are responding that there's trouble again. Here is the DAX, and it hasn't been as bad as the strongest market in Europe, but it's back to levels where it was back in 2014, 2015. I think this is end of day price, so we're about down 2% today, or at least we were earlier. So it's back down testing its moving average. It's 200-day moving average. If it fell below there, there could be some serious downside. The FTSE is already back at 2012 levels, and it's fallen through all of its moving averages. So again, these European markets are in trouble, and I'm expecting QE to come out of Europe, bazooka cannons at some point, and Draghi has as much said so, and I think the markets are telling him that it needs to happen. So another thing that we look at is the 10-year yield, and it is down at about 2%. This is not a sign of a market that believes that QE is going to happen. In fact, it's a sign that growth, and we've talked about this many times, it's a sign that growth is not happening in the U.S. and that interest rates are not going to rise. And it's right back at this critical support level around 1950 to 20. So, it needs to hold in here. Otherwise, you could see the Dow, the S&P fall, and the Fed needs to respond in some way. But what's been weird in this whole entire move is the VIX. It hasn't really moved higher with all the volatility that we've had. So there's still a calm in the market in some ways, and that worries me a bit, particularly if we do get to downside and support doesn't hold in the S&P, because we could have a lot of real bloody days ahead. But right now, I mean, you can't be too unsatisfied with where the VIX is. I mean, that kind of tells me that there is room for some upside in the marketplace. Obviously, the number that we were talking about for a while is that you want to see it below 20, even in that 18 area. But this is a pretty good place for it, considering all the volatility in the markets. And then I just want to close with talking about commodities for a quick minute. And you can see here that as a result of the U.S. dollar, it's had a move. It's almost had a V bottom, not exactly, but close, and the indicators kind of have been moving up as well. But this, again, is nothing more, in my opinion, than a counter trend rally, because if you look at the weekly chart, you see that this is going back to 2009. We're still below 2009 levels. That is really shocking, considering where the world was in 2009 and where it is now. But there's just no bid. There's deflation forming, and I think that you have to really start to wonder any moves that we get in a lot of these markets to the upside. Until proven otherwise, they're just counter trend rallies in a bear market, and you don't want to be holding positions in things like oil and gold too much, I don't think. I'll let Tone talk more to that, though, and that's all I have for today.
Oh, great, thanks. So that's really interesting. You have the DAX and the Italian equity market and the FTSE, and they all look pretty bad. What do you think that Draghi could do as far as the bazooka cannons are concerned?
So he's been talking about doing whatever is necessary, and he's been saying that for quite a while now, and that's kind of held up markets. Kind of like when the Fed was on the fence and saying they were going to keep rates at low for a long time and be in an easing matter. Now, the problem is central banks are starting to lose credibility. So Draghi needs to do something in March, otherwise he's going to kind of find himself in the place where the Fed is now, where the markets aren't believing anything they're saying. So if he's looking at the U.S., he knows that he needs to do something dramatic. So, negative interest rates are on the table and a massive expansion of QE. Not just extending the lifeline of it, which is what he did the first time, but extending the amount per month that they have. So those are things that I'm thinking about.
Right on. Okay, Tone.
Hey everyone. Oh man, I'm running so much stuff on my little computer, and with like multiple trading software and now Google Hangouts, I was not able to see George's charts that weren't coming through. So I wish I could comment and ask questions. But it's very interesting what he said about Italy because um, maybe we can post the links in the show notes. Over a year ago, I did an interview with Jeff Berwick, Anarchast, and I talked about how European banks will be shutting down. And I used Italy as an example, and that was back in January of last year. And then in February of that, just like 3 weeks later, I was at the conference of Jeff Berwick's conference, and I realized, oh my God, why did I say Italy? It's going to be Greece. And then from February all the way until Greek banks shut down in July, June or July, I think in June, I've been saying in all my presentations, Greek banks are going to shut down. That would be great for Bitcoin. There will be a complete shutdown of the Greek banking system. Since the day the Greek banking system shut down in June of last year, I have altered my presentations to say Italy's banks are next. I didn't have a timeline. It's impossible to call a day of when the Italian banks will shut down, but there's multiple tweets, there's multiple presentations where that was my view since the day the Greeks had a bank holiday. Italy's next, and it's going to be next, and there is nothing Draghi can do about it. There is absolutely nothing. If you're listening to this and you're in Italy, take out all the euros you can, convert them to US dollars, put them under your mattress. Do it. And the sooner you do it, the better. Or Bitcoin. Bitcoin works very well also.
Yeah, this is just here. The whole show is just opinions. This is not advice. So,
yes,
but,
this is all opinions. If I was in Italy, this is exactly what I would be doing, or Spain, or probably Portugal. But correct, this is just our opinions. And the reason I'm a little more bullish on the US dollar than Bitcoin is take a look at my Bitcoin chart. So I will point a few things out. So about a month ago, I was really stressing this divergence here, where the price of Bitcoin made a new high, but your momentum indicators, the RSI that I just circled, and the MACD made a lower high. That is textbook 101 divergence, which is calling for lower prices. When you see this kind of divergence, the technical analysis textbook 101 will say that momentum is telling the truth and the price is lying. So the price is overvalued and momentum is telling you we're going lower. That's why I've been bearish on Bitcoin for a while. Now, let's look at what's happening today. After the big drop, that again, I blame Mike Hearn. This is now like the second or third Bitcoin price drop that I blame on Mike Hearn, but it follows the technicals. We have a higher low in the price, which I just drew a thicker dash line. This here, we have a higher low, which normally would be a good thing. You have a higher low. But if you go down to your momentum, we once again have a lower low in the RSI and a lower low in the MACD. So now we have divergence again. So textbook technical analysis 101 will say that the price is lying and momentum is correct. Again, it doesn't mean that I hate Bitcoin. It doesn't mean that I don't think it has a future. I am ignoring all fundamentals of Bitcoin. I'm just looking strictly at the technicals. And the technicals say we have to go lower. The technicals just say we have not bottomed. Yes, the RSI hit my oversold condition, but now I have to expect 2 or 3 hits of the oversold RSI because we need to have this divergence in reverse. It's just the way technicals work. This is a direct result of the unreasonable, unwarranted, exponential rise in the price. You can blame Triple M, you can blame whatever, but when you have a situation of an exponential rise that is not substantiated by new users of Bitcoin, this is what you're going to have. So this divergence took 3 months to develop from early November all the way up till a week or two ago. So that is 3 months of time. So I am personally looking for about 3 months of downside. So we're probably going to bottom out sometime over the next few months. We might even keep going down into the halving. There could be fundamental reasons. There could be bad announcements. Bitcoin core team can't get their shit together, whatever. But technicals are saying you're looking at multiple months of downside. I don't know how low it's going to go, but we need these technicals to reverse. I guess it would be kind of nice to make a lower low at around 250, but we don't have to. We can just meander like this between 300 and 400 for 3 months. But I am not bullish on Bitcoin at the moment from a technical perspective. From a fundamental perspective, I love it. If you're the kind of person that believes in efficient markets, keep buying your $100 worth of Bitcoin every week or whatever it is you do, and you'll be fine. Because when one Italian bank shut down, Bitcoin will do great. All right, that is my Bitcoin talk. All right, let's move on to the real markets, the S&P 500. So the S&P has been very interesting. In last week's video, you guys would have seen that I went long the S&P in the futures market at 1835, I believe. So I went long around here. I had exited that position already, so which is why you don't see any of my positions on here. And the S&P has been very, very tricky. I really thought that there's going to be more downside now. But let me just do a quick backdrop, sorry. So we had this. This is the situation that had already played out, right? We had our highs. I was looking for a big scare. You can look at previous videos. Then we had 100 points here. So the scare was going to be probably around 1900. We went even lower. So I had thought that we turned around. What do I think? I had thought we turned around here. Okay. And like I said in the previous videos, this candle here really scared me. And this candle had turned me from being bullish S&P 500 for the middle part of 2016 to probably bearish S&P 500 for the next 6 months. It all had to do with this candle. That just like killed all bullish momentum. We had this monster reversal candle right here, which I did trade to the upside. Check the previous videos. And now I think we've played it out. I think this is as far bullish as we go. I think it is possible to still have one more swing to 1950. It would be kind of nice, but now we have this very formidable 1900 resistance. And I actually did go short the other day, but the pre-Janet Yellen announcement swing, unfortunately, hit my stop loss, and right after that, the price just tanked. So I am not very bullish S&P 500. I think there's still more downside. Now at the bottom, I have the cash S&P 500, just so you can see the differences. Let me make this white. So here is the big fall back in August of last year, and look how quickly we recovered, and we recovered a lot. And then after we recovered, we went down and made a higher low right here. Now we have a similar situation. We didn't fall as quickly, but we fell just as much. We also had a swift recovery, but it was very, very short. It wasn't like it was back in August. And now we're kind of stuck in this range. And this is important because next I'm going to pull up a slightly longer chart in the S&P 500. And again, one more thing. Sorry, guys. So this is my broker. And as you can see that my broker has a swing low here. and it's lower than the swing low here. It's very clearly lower. This goes to about 1800, and this is the cash S&P, and this goes only to about significantly higher, like 1880 or something like that. If you look at stock chart, which is also the S&P cash, notice how this is at the same exact price as my broker, but this is significantly higher than my broker, which is weird because they're supposed to be the same exact thing. But in any case, it's clear that we had a lower close in August than in October. And again, I love my divergence. I love my triangles and I love my divergence, those that follow me for a while. You have a higher high in the price, and you have a higher high in the indicators. And this is actually not divergence. This is confirmation. This is confirmation that the trend is changing. Okay, just like over here, we had lower highs and in addition lower lows. And the momentum was also going down here and here and here as well, right? But now look, we've made a low, but we don't know what the momentum is doing, right? So we need one of two things. We either need divergence or confirmation, right? In this case, we had divergence, but guess what? If the price would have gone even lower, it is possible that your momentum indicators would have remained higher. And that's divergence, which is just as good as confirmation. So I am waiting for one of two things, either divergence or confirmation. This confirmation can be to the downside, this confirmation could be to the upside. But if we have divergence, it's to the upside. So what I am looking for one more low. This could be a lower low than what we had a few weeks ago. It could be a higher low than what we had a few weeks ago. But we need a secondary low. Just like we had a secondary low here, as the low forms, you don't know if it's going to be a lower low or a higher low. I am looking for a lower low. Lower low or higher low, it doesn't matter. I'm looking for a low. Whether we go up a little bit higher to 1950 before we go down, or we go down from here, yeah, it matters a lot for trading, but for long term, not so much. Okay.
Great.
So
did you want to bring up gold too?
Yep. So I'm pretty much done with the S&P. So this is what you're looking for. You're looking for what is your momentum going to do when there is a secondary low, whether that low is higher or lower. Very quickly, let's look at gold. And I was talking about divergence between gold and the S&P 500 the other day. I did not like how weak gold was because it couldn't break this resistance, but now it has. So today we bounced back a little bit in gold. We finally broke through it, and now gold could have an upswing, and gold acts counter to the S&P. So it's possible that gold has topped out, but if gold has topped out, then the S&P can rally to 1950. But if gold has some more upside, then the S&P has some more downside. So I am looking for upside in gold to 1150, and I'm still bearish. Okay, so the opposite in the S&P. I'm looking for the S&P to make that secondary low, higher or lower, and then the S&P swings up. And that's when gold swings down. So that's my view on gold. Very quickly on oil. Again, last time we made this video, all we had was this candle here, the ultimate bottom candle. And I had said in that video I was going to go long oil. I wasn't going to try and time the bottom. I was going to wait till oil broke above 30 and then go long because I've been trying to time the upswing. Of course, I'm an idiot and I did not follow my own advice. This would have been a perfect trade the moment it closed above 30, and 35 would have been my target. It's a nice round number, which we came close to hitting today. I mentioned it in the last video as well, even though 35 has not had anything to date of reference, of note. It is a nice round number, and 40 would have just been too much.
All right, let's have a look at Bitcoin. Yeah, of course, there is the divergence that Tone was talking about. And we've seen that for a while. But as far as a confirmation, I'd like to see the green lagging line be below the daily cloud and the price to be below the daily cloud. And, for the last few days, the bottom of the daily cloud has been the support area. And if you look at the weekly, this is OKCCN, you've got the same situation where the top of the cloud has been the support and the Kijisen. And if this lagging line makes it through the weekly cloud, well, then I would say that, we have some upside. But if it fails to break through the cloud on the weekly, then I would definitely agree that, we've got to test some kind of low again. All right, and going over to orderbook.net, where you can trade futures. They've got a daily future, they've got one that ends in March and one that ends in June. And currently, there is a small premium, but it's only about $2 or $3 on the daily, and on the other ones, about $5. And that's a lower premium than last week at the same time. So definitely check out orderbook.net. And they sponsor this show. Also, check out Vaultoro. So at Vaultoro, you can trade the pair of Bitcoin and gold. And, you can go in and out of Bitcoin value into physical gold value. And the cool thing about Vaultoro is they are very transparent about holding physical gold. You can audit them with a third party without logging into the site. So you can rest assured that your gold is in safe hands. And if Vaultoro were to disappear for some reason, you still have the gold in your name in a vault in Switzerland. So definitely check them out if you want to go in and out of Bitcoin to the gold value, then definitely check out Vaultoro. All right, well, that's all we've got for today. Thanks a lot for watching. Don't forget to give us a thumbs up. Don't forget to subscribe to World Crypto Network. Also, check us out over at bitcoin.com. Thanks a lot for watching, and talk to you next time.